U.S. financial markets wrapped up a volatile week with mixed performance, as investors reacted to ongoing economic and policy-related uncertainty. Starting with the key numbers, the Dow Jones Industrial Average fell 0.6% on January 23rd, while the Nasdaq edged up 0.3%. Intel shares declined after issuing weaker-than-expected guidance. Meanwhile, gold prices touched record highs as investors sought safety, and the U.S. dollar weakened. Market analysts say uncertainty around economic policy and trade decisions continues to weigh on investor confidence. According to several institutional strategists, recent market swings highlight how sensitive equities have become to sudden policy changes, leading to cautious behavior across capital markets and reduced risk-taking. At the same time, shifting regulatory and financial trends are reshaping the banking and fintech landscape, creating both challenges and opportunities across the financial sector. While public markets remain unstable, one area drawing strong investor interest is private credit. Investors are increasingly attracted to its floating rate returns and relative stability during periods of market volatility. Analysts note that private credit offers businesses flexible financing options, especially for acquisitions and expansion, when traditional funding channels slow down. However, the rapid growth of private credit, expected to approach nearly $4.9 trillion by 2029, also carries risks. Experts caution that many borrowers in this space are smaller companies, which can be more vulnerable during economic slowdowns. Credit analysts emphasize that strong underwriting standards and careful monitoring will be critical as economic conditions evolve. Elsewhere in corporate news, several companies are navigating financial restructuring and strategic planning, while others are facing pressure following earnings reports. Meanwhile, expectations remain that the Federal Reserve will keep interest rates steady through mid-year, and lawmakers continue discussions around digital asset market regulations. Conclusion. Overall, markets are operating in a complex and uncertain environment. Ongoing volatility is likely, and the performance of alternative investment areas like private credit will be closely watched in the months ahead.